I can't wait to get your thoughts on the economy because, like I said, you're known as the rebel in this world. You're a former hedge fund manager. You're now a hotelier in St. Bart's. I could think of worse places to be in. But let's talk inflation now because you have some pretty controversial views. I saw one of the folks say to you, you're telling us to just keep about our business, keep grocery shopping. Inflation's not going anywhere. What's your latest take in response on inflation? Pretty much that.
Hey, listen, I'm like a holograph. I'm actually transmitting this message from the future, right?
You're seated in front of me, though, right?
Maybe,
okay.
but mine for sure is 18 months ahead.
Okay.
And 18 months ahead, let me tell you, I see tumult. I see chaos in the global economy brought on by policy errors, I believe, and by a misunderstanding. Why are we talking about a misunderstanding? It has always been accepted, if I have to quote the great, the almighty Milton Friedman, inflation is what? It is a monetary phenomenon. Everywhere and always, it is a monetary phenomenon, okay? Where is the monetary phenomenon? So my analogy would be, think of the economy as a large purse, okay? And prices, everything you spend, prices are typically 10% greater than last year. You need a 10% additional set of cash, notes and coins and credit cards and Apple Pay to grow by 10. If it's not growing by 10, then discretionary spending, your Netflix account, or your driving, or your eating out, takes the pain. And so as we move forward, I see a transition as people with no choice rein in their spending.
And you think the stocks that will get, or the companies that will get hit most are, you've already seen the disastrous results from Netflix, Apple. Who gets hit the hardest here?
Money gets hit the hardest. And this is where it's confusing because there are actually three forms of money. There's only one that we ever think about, which is your local bank, and it's regulated by the Federal Reserve, and your deposits are insured by the Treasury. And it's like, homespun apple pie is wonderful, except that is just one, not tiny, but one aspect of money, okay? And it's not been expanding for the last 15 years, okay? There's another form of money, which I call laundromat tokens, and it's pure public money. It's the Federal Reserve coming in and creating all these banking reserves. But these banking reserves are latent. They're not real money. It requires the banks to say, yeah, I feel really good. I'm a funky risk taker. I want to lend to the household sector in America. They're not doing it. So it's late, it could be, but it's not. And then the final form of money, and this is where, to the crux of your question, is this kind of matrix world, this offshore repo market, dollar market. They've been printing a lot of money, okay? And that's where we see inflation, but we see asset price inflation. Now, the Federal Reserve's pivot to these higher and higher rates, what's happening is, if you will, is pulling the oxygen that supports this elevation of asset prices. And so they're tumbling, and as they fall, the collateral that supports the real banking system, we're seeing monetary destruction. And that's why I see dead people when I look into the future.
Dead people?
Dead people. Metaphorically dead.
So let's zoom in on your thoughts here for a second on the Fed, which I find is fascinating here. So are you saying, if I read between the lines, they cannot keep tightening?
Let's put it this way. In the 1970s, there's a lot of reference to Paul Volcker. Famously, infamously, he squeezed the peeps and we had 20% rates. But debt to GDP was roughly 1 times. The stock was 1, the ratio was 1. Today that ratio is 4 times. So I'm saying maybe terminal Fed funds rate is 5. 5 times the 4 gives you the 20. But even at those levels, it's going to feel like 20%. Given the immensity of the debt. So, your American household, your mortgage rate now is 7%, plus 7%. Are you buying another house?
No. What assets would you be looking at, or what would you be telling the fine folks watching this program? What is one to do if this is the reality we're living in? Panic.
Panic is the most subversive statement you can make. So I'm brought onto your show in the company of other experts. I'm slightly different. I don't wear a suit. That's a clue, because the other experts are invested in the status quo. The status quo is that tiny coterie of the 1% get richer and richer because they've aligned themselves to the economic policies of the mercantilist nation China. It enriches China and enriches Wall Street. But you folk at home, how do you feel about it? Because you're getting screwed.
Absolutely.
Okay? So that's why I say panic. Burn the stables. Okay? You don't have to be invested at all times. Take a break, because I saw this in 2008. It's speculation on my part, it's conjecture on my part. My success rate is not 9 out of 10. It's like 5 out of 10. 5 and a bit out of 10.
Yeah, that's still pretty good though.
Pretty
right.
Yeah, pays the bills.
Yeah. But Hugh, is there anywhere you would be to avoid that panic, to avoid that death scenario for the folks? I've had experts on saying you should be more in cash now, be ready to be liquid, be in gold. Is there anything you're seeing right now that could provide some solace?
Investing presently is like licking the honey from the razor's edge. And by that, what I mean is, so you mentioned gold.
Yes.
Gold. There were a few people that could see the approaching storm of 2008 bankruptcy of the financial system. And they purchased gold, the least risky asset you can think of. Gold halved in value. This is when the storm finally hits and it comes on shore, there's a liquidation moment where everything is sold.
Right.
Okay, so actually, where I am, typically the Fed has caved in on 20% wise, S&P down 20, J1 power went, I gave up, okay, you got me, I was wrong, okay. We've been down 25, J's, nope, not happening. So I believe the market's gonna go, let's go 35%. Boom, boom, Mr. Fed, are you listening? Nope, inflation's still 7-8%. Is it 45? Somewhere between 35 and 45%. I might start to engage and touch a few risk assets. But just now, there's too much.
What do you think is the end game for the Fed? What are they trying to do? Okay, they're talking about fighting inflation, but at what expense? Can't they get to a neutral point where you're not killing people, choking? What are they doing?
The fundamental problem is they talk about financial conditions as opposed to monetary conditions. Okay, I would make a bold claim that there's no more than 5 people in the world that understand money. They don't work for central banks.
Right.
By and large, they don't work for investment banks either. Okay, that is the root of the problem. They are looking at the world through one of those channels that we discussed, those channels of monetary intervention, and they're missing this matrix-like misadventure, right? And also, they're trying to solve a political problem. The inflation that we have is a political problem,
right,
which was we had a pandemic.
Right.
The Fed, the Treasury sent
right,
out stimulus checks at a point when the industrial
exactly,
world was closed. Okay. Now, I want to really ram home this point because it's very analogous to 1948. US CPI was running at 20% in 1948. Now, we don't talk about the hyperinflation of the late 40s. Why? Because we are the mother of all recessions and there was no monetary accommodation, which meant a year or so out, the inflation was more like 3.
So Hugh, do you feel comfortable going on record saying you think we're about to enter the worst, or perhaps we've already entered the worst economic period in history?
Heavens, you're putting, yes, Dickens, why not? I'm saying to you, we are in a depression. Okay. This is 1937, and the Fed has the audacity to tighten in a damn depression. Bad things are going to happen.
Let me ask you this, because I just did a fabulous interview with Frank Justra on his thoughts on a global monetary reset. Do you think everything is aligned and that we are on the cusp of a global monetary reset, where the US dollar will no longer be the reserve currency of the world and there will be a major shakeup? Are we there yet?
Do not want to give ardor to the sexual fantasies of men in suits and this whole notion that the world is broken because of the supremacy of the dollar. But to your question, we are so close to a denouement of the present system. What is the present system? We've moved from a gold standard to a dollar standard. Okay, both were undone by cheats, sovereign cheats. Back in the 20s, it was here. We were cheating in this country because the currency, when gold flowed into America, it was sterilized. The modern equivalent is our Chinese friends, all right? They've been sterilizing all of their money, robbing their household sector, and dumping it into treasuries, okay? That's the fundamental error. That's why we have this deficiency of demand. It's why we have Trump. It's why we have anger in the heartlands. That has to be addressed. That's the denouement. Now, that's why I was willing to say to you, this could be worse. This could be worse. Let me be very specific. We're now on the weakest performance of the Chinese currency year to date, okay? It's 720. Now, during NAFTA, which was 1994, it devalued to 9. Today it's like 730. It's profoundly the wrong rate, and yet it might go to 9. 9 means it's getting weaker and weaker. That would bring on an economic, a deflationary catastrophe, the likes of which we've never seen.
This is my first time speaking with you, so I'm interested to get your thoughts on cryptocurrencies, and is that a solution? Is that a way out of the system for you?
So I keep mentioning this depression word. Thankfully, we've only had 4. They're hen's teeth-like, they're rare. We had one in 1825, let's call it 1870, 1930, and today. We overcame those difficulties because there was an innovation in money. So when you say to me crypto, really crypto, I think of blockchain, and I think of technological advances, and I think of the 9 million of debt I have with a French local bank in the Caribbean, and I think of all the papers, because they don't trust me and I don't trust them, and it's like getting, if you're a naughty schoolboy and the teacher says, I want you to write 100 times, I will be a better schoolboy. That's effectively what I'm doing. Blockchain offers the opportunity where it's like, we trust each other. Boom, it's done. So possibly, but that's not Bitcoin.
Right.
Bitcoin's a speculative asset whose value is determined by the upside in other speculative assets. And that upside just now is just not there.